Well, good afternoon, crypto traders. Today is Friday, May 6th, 3:30 p.m. Eastern Standard Time. We are about to close this week out, and man, have we had some whiplash this week, have we not? Up and down. I don't even know, what to say about all this, but yeah, it's been a ride. So I want to start off by looking at the most recent Bitcoin price action. And then what I want to do is jump to a weekly chart. I actually had created a video just before this, but it got kind of messy. I thought about jumping to the weekly chart as I was doing the video, and then I did it, and because I wasn't prepared, I got long in the tooth and I just rambled on. When somebody loves something they're doing, like I love trading crypto and I love technical analysis and looking at all this stuff, you just tend to have all these thoughts in your head, and they're all, they all come out at once in no particular order. And so I got to be a little bit better about keeping my thoughts organized and sticking to my time frame here with TradingView, which is 20 minutes. And I think that's a fairly decent time span for most of us. Like I don't even have a 20-minute tension span. So bless you guys who sit here and listen to me ramble on and on about this kind of geeky stuff. Let's jump into our charts, and I will show you what I see here on the daily, and then we'll jump into the weekly real quick, as well as look at some other potential indicators. All right, so on our daily, J-Pow and company came out with that press release on Wednesday at 2:30, and they, the market collectively, I believe they just breathed a collective sigh of relief. All right, we were all happy. This whole marker was said and gone. And what happened? We jumped to the upside of this bullish wedge. And so I thought, oh, that is amazing. That is great. That's better than my prediction. My prediction was, if you remember, if J-Pow comes out with 25 basis points, he's only raising it 25 basis points. We're going all the way into the green territory, Bitcoin. All right. And J-Pow did not raise it 25 basis points. In fact, he just kept expectations, which was 50 basis points, and stated something to the effect that next raise would also be 50 basis points. And if you remember, I came out with this chart on Wednesday morning. Before that meeting, I said this is what's going to happen based upon the Fed's statements. So J-Pow came out and said, okay, we're going to meet expectations, 50 basis points. And the next one is also going to be 50 basis points. All right. So in that case, I thought, well, we'll stay here in this pink territory if that happens. And what happened is the market, like I said, it breathed a collective sigh of relief. We went up and into this yellow territory, and then we rested ourselves on this 39,300 support, which coincidentally almost intersects our ascending trend line. I thought that would provide us enough support at that point to stay up and above and in that yellow territory. All right. But we did not get confirmation. This candle went up. This candle went down. All right. That's why I always like to look for confirmation. All right. If we would have had this candle stay above and close, and another candle, I like to see 3 candles on crypto because it does not close. Markets do not close. So I like to see 3 candles as confirmation. For that reason, guys, I'm a little bit of a slower trader than some of you like. Like, I know many of my paid subscribers, when we had that big red candle down, you jumped out of your trades right away. That's good. You guys are following your own strategies, and I applaud that. I'm not trying to tell anybody what to do. I would rather people not trade like me because I have a very high risk tolerance. Sometimes I go deep in the red before I see good profits in the green. But that's the way I just like to trade. And I mean, I don't necessarily like being in the red as deep as I go sometimes, and I kick myself for it. But it's just the way I trade, because I would like to see confirmation on the daily. That's the time basis that I go off of, because I am a swing trader. That is my most critical chart. That and the 4 hour for shorter, for shorter term confirmation moves or for quick inside moves. And then the weekly gives me the longer time frame overarching view. So sometimes I'll jump out to the weekly and into the 4 hour to figure out what my entries, exits would be. All right. And then, of course, I like to look at the shorter term time frames as well, but I don't trade off of those. And I like to look at the longer term time frames as well, but I don't trade off of those. I trade mainly on the daily and then use the 4 hour and the weekly for guidance. Anyways, not to get too long in the tooth again, but we are looking at the daily chart, and we have one candle that has closed below our black line in the sand. You guys have heard me talk about this for the last 4 months here. This line right here, meant to highlight that, is something we have nonstop been talking about in every one of these weekly update videos, Monday and Friday. All right. And now we have closed below it, and it's looking like, though this hasn't happened yet, it's pretty obvious to me, unless something super incentivizing happens, our next candle is going to close below this black line. I mean, you guys, that's a pretty reasonable statement to make, right? And then so what I want to see is also a third candle over here closing below our black line in the sand. Once we get that third candle, now I start looking to strategize my exit, or maybe I'm looking to enter into something else. But it's going to look very ugly on my trade tracker spreadsheet, but I have to start thinking about what I would do if people weren't watching me. It throws a little bit of a funk into my trading strategy when I know that thousands of people are watching me. And I've kind of gotten used to that, but I still know that people are like, oh, what's Stu going to do? Well, guys, I don't want you to do what I do necessarily. I want you to follow what your own inner guidance is telling you to do. Some of you have been doing that, and you sold on this red candle. I applaud you for that. All right. I did not sell yet, only because I'm sticking to my disciplined trade strategy. I want to see those confirmation candles. Let me know for sure that we are actually going to continue down. And it sure is looking like that. All right, enough said about that. Let me bring up a chart here on the weekly, and I have to find a clean chart here because otherwise all these indicators kind of get sloppy on the chart. That's what we found in the last video that I deleted. I don't like doing videos twice. Usually I just go with the messed up version, but I just started to get too long in the tooth, kind of like I'm doing right now. All right, and so let's zoom out here. This is our daily. Right now we're going to zoom out to the weekly, and you can see what I've highlighted here is this nice M pattern. Well, should I say nice? I mean, it could be bad. All right, we have not yet broken below this neckline, but when we do, and if we do, I shouldn't say when, because I don't want to be pessimistic. I'm almost too bullish a lot of times, and I don't mean to be a perma bull. It's hard when you believe so, when you're so vested into crypto and you believe so much in the future of it, it's hard to grow pessimistic when you should sometimes. But if we break this neckline on this M pattern, which I've highlighted here, I expect us to go down to the 200 week, I should say, 200 candle moving average, 200 week moving average. I said it right. And that is all the way down, guys, at 21,731 today. All right. We don't want to see any movement below 36,000. If you see a break below 36,000 on the daily, you need another 7 candles to get another candle on the weekly closing below that $36,000 mark to confirm on the weekly a break of this neckline. Otherwise, it's not a confirmation. It's just a move below 36,000. and then we pop back up, and we're going to be on the top side of this on the weekly. All right, you get what I'm saying? So that's what I'm looking at on a longer time frame. We definitely don't want to see 36,000 price barrier broken, and then for us to reside in that area under 36,000 for more than 7 days. If we do that, that's confirmation on the weekly, and that means we probably will go all the way to that 200-week moving average. Now, on the positive side, we have never broken below and confirmed any move below the 200-week moving average. So I'm pretty sure that's going to hold us at that point. I don't know what event could take us down there because liquidity is dried up on the exchanges. Now, that can be a good thing and it can be a bad thing. If liquidity is dried up on the exchanges, you get these violent moves. And of course, if the trend is on the bearish side, those violent moves are likely to occur on the downside. If the trend is on the upside, then those violent moves will swing rapidly upward. If this neckline holds here, you could see a violent move upward. All right, you could see that. It doesn't feel like that right now, does it? It doesn't feel like that. But if we break this neckline on the weekly and confirm, most likely we go to that 200-week moving average for sure. And let me zoom out here. Here's the 200-week. We have never, ever confirmed any move below. Now, we broke below in March of 20. We broke below the 200-week moving average. Did not confirm it, though. All right. Next week, we were back up above that price. And that was when we, dropped all the way down to that. Remember that? I remember that. $3,500, and at that point, I got trolled hard for this, but I came out and said this is going to be our low. Everybody buy, and I was following technical analysis at that point, and people were calling me a noob and telling me that the price was going all the way down to $200 or $300, some crazy thing. It's kind of like what's happening right now. The bears are back out, and I'm getting messages all the time. We're going down to, I've had people tell me we're going down to 10,000. I can't see that, guys. I can't see that. I can barely see 20,000, but I can see it on this chart. And to tell you the truth, let's jump back to my daily chart. I can see it on the daily chart if and only if this head and shoulders pattern that I negated so boldly a few months ago went against the 85% probability that we would break or that it would follow this pattern. I negated it, but it has not been invalidated. So I have not been proven right yet, according to price action. To invalidate this, essentially we have to break this price up of $50,000, all right? That's the right shoulder. That's the body high of the right shoulder, somewhere around 50,800. That would invalidate that head and shoulders pattern. We almost got there a few weeks ago. We tagged that 200-day, and then we just crumbled under that. Once we tagged that 200-day, we just crumbled from there. All right. So what I was going to say is this would coincide with our data on the weekly. This target down here from the head and shoulders pattern. What I'm going to do is drag this chart up here. Can't do that right now. All right, so you can see the target down I measured from the neckline to the top of the head. That target down takes us all the way to 23,000. All right, and the weekly 200-day moving average was ascending up, so that would intersect right there with that 23,000. Are we going to 23,000? Obviously, I don't know the answer to that, and I don't want to believe that. And it's too early, really, for me to say yet. We have to really break that 36,000 barrier down, that 36,000 support level, and spend about a week under 36,000 for me to know that this target at 23,000, 24,000, somewhere around there is going to be met. All right, this line, this ascending line is coming up. So I think when we met it, it would be somewhere around 26,000. And I don't know. It's hard for me to believe we go that low. It would have to take some catastrophic event, which I don't want to talk about right now because we have a war going on in Russia, and there's, you can imagine all kinds of worst case scenarios that stupid humans get into with that, causing our own devastating end of life. And that type of scenario or event could take us down there. So we have to really watch all things, not just technicals, fundamentals, and news events in recent history. Don't spend too much time on that negativity, but you have to be aware of what's going on. Okay, so that's what I'm looking at. 36,000 is critical. One more thing here before we look to a few more charts here, and that is we still have hidden bullish divergence on this daily. Look at this RSI, guys. The RSI is telling us there's hidden bullish divergence. We continue to trend up on the RSI even with this big old massive red candle. All right, so still some positive signs to hang on to. Not saying that's going to not break. That's the $36,000 mark. All right. So if we break 36,000, we break this ascending purple trend line that's holding us up on the RSI as well. All right. I got to keep moving here. Let's jump to the dollar real quick, and then I'll close this thing out. The dollar is currently hitting resistance that we have not hit since 2016, I believe. Zooming out on this chart, that's not it right here. 2016, 2017. All right, so it's as strong as it's been in 5 years, and it's also looking to move up above that resistance and hit this descending black trend line, which we have not hit since 2020. That is how strong the dollar is, guys. Why is it that strong? Well, it's just a matter of the fact that people are using the US dollar as a safe haven. It's a matter of Jay Powell raising interest rates, keeping the dollar strong against other global fiat currencies. All right, other people, other nations that are a factor raise their interest rates as well. Jay Powell just raised his faster. All right, so that keeps the dollar strong. All right, and we're seeing other deflationary, not deflationary, inflationary factors. Globally, like Europe especially, and Russia. Those inflationary factors help to create a strong dollar, strong U.S. dollar. All right. VIX is important as well. Another spike. All right. We keep having this whiplash in fear, and then we come back down and we rest on these supports. But it's trending up. Fear is trending up. That's important. That weighs down on the market as well. All right, I can't spend much more time here on any of these guys, but we need to watch this. CPI data comes out next Wednesday. I'm going to close it out here, and we'll cut this video for the weekend. All right, so it's fairly obvious that on Bitcoin we have gone bearish, but we still need that confirmation. And the confirmation comes in these next two candles. This candle today, which closes 8 p.m. Eastern Standard Time, and then we want to see another candle tomorrow. We want to see where that one closes as well. All right, a move above 37,550 is more positive. That takes us into that pink territory up there that I've been talking about, and I think we're going to spend time in. But we still exist in the bearish side of that black ascending line. All right, so even with the RSI showing hidden bullish divergence, we are still in bearish territory. We must watch all this and any other indicator that plays an impact. CPI data is released next Wednesday morning at 8:30 a.m. Eastern Standard Time. This is potentially a big catalyst if it's good data. Could be the opposite. So we need to listen for that as well as other indicators. Watch the dollar, watch the VIX, watch all of that stuff, guys. All right, until next week, I'm going to take off here. Have a good weekend, and peace, y'all.